Are you struggling to make profits trading cryptocurrencies and tired of wasting money on trading classes that don't deliver results? We've got a solution for you. Our trading AI has been developed by a seasoned trader from Switzerland and has been tested over years to help you make successful trades. All you need to do is sign up with Bybit using the link below, and you'll receive free money on your first deposit as well as reduced trading fees. Once you're set up, you can effortlessly copy the trading bots with just one click. Our AI currently has a 100% win rate and generates over 15% ROI per month, and we're confident you'll see the results for yourself. Don't believe us? Try it out for free by following the links in the description and see for yourself. Sign up now and take your trading game to the next level. It appears that the SEC's current cryptocurrency cases could get them into some serious problems. In this video, I want to explain why the SEC may have made some extremely poor assumptions and why their efforts to undermine the Bitcoin business may be failing terribly. We recently wrapped up a brand new cryptocurrency case that is somewhat under the radar. It will also demonstrate that the SEC is now battling from a position of weakness. I have been warning for the past several weeks that the SEC may be in serious danger in the Ripple case, since it appears that the possibility of XRP being a security may already have been ruled out entirely. In this video, I'll explain why the SEC is currently in such a precarious position and how bad things could get for them in the coming months. I also want to show you a recent video of John Deaton about the anticipated conclusion of the triple sec case. Recently, a lot of attorneys have spoken publicly regarding the lack of a decision and when we may expect one. I'm going to hand this film on to John Deaton. Tell you folks what he thinks and when we can anticipate a decision, please. So most people, in my opinion, seem to be asking, where is this thing? Let's hear from John Deaton and company. And finally, I'd like to discuss a turning point that will affect all markets. Make sure to stay tuned to the MHC because you won't want to miss it. It seems like we were at a moment where it was quite clear whether or not we would fall back and create new lows or continue rising. I'd like to start this video by briefly discussing a case that has just found a resolution. And when it originally came out, this one undoubtedly flew under the public's notice a little bit. Everyone was kind of freaking out when it kind of vanished and then suddenly reappeared. Metal Law Man is genuinely reporting on this. And because I found his analysis to be both quite intriguing and somewhat original, I want to break it down. Actually, I had a totally different viewpoint when I initially learned of the case's resolution. Indeed, I believed it to be awful news for the Bitcoin sector. But he really changed my viewpoint. I want to analyze what he said in detail and explain why the SEC is currently at a serious disadvantage. Here's my perspective on the agreement in principle between the SEC and the Waukee brothers that was revealed earlier this week. He said, the SEC blinked, and here's why. For your information, the SEC was suing a few former Coinbase employees for insider trading at the time this was happening. Yes, these Coinbase employees were improperly trading with inside information. But the SEC attempted to add the information that these former workers were trading unregistered securities to this complaint. Hence, it's likely that the SEC wasn't really concerned that they were engaging in insider trading. The SEC only wanted to assert that these individuals were trading unregistered securities under the guise of crypto token securities. However, rather than sue Coinbase for listing these securities, the SEC preferred to target these unnamed individuals because they would likely be powerless to defend themselves. It's referred to as backdoor regulation. Although it is unpleasant, the SEC prefers this strategy. The brothers have previously entered guilty pleas to criminal charges related to their insider trading, so according to Metal Lawman, the SEC likely believed the Waukees would simply roll over. That kind of case, a fast victory with no opposition, is the SEC preference. However, the Waukees astonished the SEC by deciding to battle with an elite legal team. The legal team's arguments clearly outlined why the 9 tokens at issue in the case were not securities. The SEC realized that, if it follows through on its threat to sue Coinbase, it might actually lose the case because of the superb amicus papers submitted by Coinbase, the Blockchain Association, and the Digital Chamber of Commerce. All the marbles will be like that. to make sure they left as much on the table as possible for a potential case against Coinbase. The SEC may have given up on the Wahi case. The Wahi brothers may eventually cooperate with the SEC in some capacity as part of their settlement, which they can utilize against Coinbase. Yet, this shouldn't really matter because the Coinbase case, like the Ripple case, will become a legal issue rather than a contentious set of facts. Finally, it is conceivable that the SEC may come to its senses and see that even though the tokens were first offered as investment contracts, they no longer meet the criteria for securities when sold in the secondary market, as John Deaton has been arguing for years. I realize that was probably somewhat complicated, but let's make it clear and concise. What happened just now? It appears that the SEC's case against the former Coinbase employees was rather straightforward. The SEC believed that this would be an easy case to win because the defendants would never be able to mount a strong defense. Yes, he was going to be able to sue them on the grounds that the tokens they were using on Coinbase, a platform where securities are subject to backdoor regulation, proved that these employees were trading illegal securities and, as a result, labeled the tokens as securities in a case that would be simple to win against some inexperienced individuals with poor lawyers. Well, these individuals successfully overturned the SEC's position in this matter thanks to their excellent legal representation, backing from the cryptocurrency sector, and the production of compelling amicus curiae filings. The SEC was entirely unprepared as a result. And suddenly they found themselves in a situation where, if they continued with the case, it may end up like the Ripple SEC lawsuits had, with a very tenuous claim that the tokens themselves were securities. As a result, the SEC effectively withdrew, saying, "Wait, no, let's just settle, let's get this over with, and let's entirely abandon this problem." The SEC would not have reached a settlement, and would have made these individuals take the case to court if they had truly wanted to establish that these tokens were securities. Yet, it's possible that the SEC is beginning to realize how weak its position is. And I want to make a really intriguing observation because I have been conversing on Twitter about this same subject with a former SEC official about this same subject. How may the tokens be securities in and of themselves? It does not appear to make sense. And the information I've received from this former SEC lawyer actually comes from Scott Chamberlain, a lawyer who practices in the XRP community. Don't misinterpret that then. Yet, according to what I understand from this former SEC attorney, the SEC cannot possibly claim that the tokens themselves are securities. He personally denies that the SEC is even attempting to make this allegation. Well, individuals like John D. and Scott Chamberlain have read the entirety of the Ripple SEC case. They are aware that the SEC is attempting to send securities in the form of tokens. Yet, the former SEC employees don't even acknowledge that this is the case because they find the reasoning to be absurd. In the current SEC case, he has indeed entirely lost his bearings. He had hoped to find a judge who would simply approve everything he said. And it turns out that the current legal issues aren't particularly logical. Absolutely. Because they sought to make a legitimate claim, he encounters cases that are so complicated. They initially tried to claim that, sometimes that Ripple sold XRP, and occasionally they offered the XRP, suggesting that there might have been an investment contract. Everyone agrees that although Ripple has occasionally offered XRP as an investment in contracts, the token itself is not a security. And the SEC made that claim in the hopes that they would be successful and the court would agree with them. But it's utterly crumbling in their faces. Nobody considers the currency to be a security. Nothing about it makes sense. And going forward, this will be the SEC's largest problem. They are presenting incomprehensible arguments in court. What we are witnessing is the SEC being pressured into submission. The claim that the token itself is a security must be abandoned by them. And in this situation with Wahi, that is precisely what just occurred. What I anticipate taking place is that the token itself will not be a security, as John Deaton has been stating from the beginning, and that this will then be made official through the Ripple SEC filing process. If the SEC is unable to come up with a solution to settle the Ripple. In any case, this is fascinating since it is obvious that the SEC is currently battling from behind. Even former SEC employees don't agree with the claims they're making. The SEC has utterly lost its way and is now presenting illogical legal defenses. Also, based on what I heard during the first call, it appears that the SEC will fall short of grayscale. The court also found it completely incomprehensible why the SEC would approve a Bitcoin futures ETF but not a SPA ETF, and couldn't even comprehend what the SEC was trying to convince him of. And because the SEC is really adept at managing the narrative, when they can simply go out and say everything is a security coming into the register, this is just a fantastic move. But they are failing to substantiate their allegations in court. And this is what's most crucial. The floodgates will be opened, and various cryptocurrency initiatives will have the confidence to take on the SEC once the SEC has suffered a few losses. This is exactly what we need right now, since it will begin to give the Bitcoin sector clear guidelines and stop the SEC from impeding innovation. In the end, the legal proceedings for these Bitcoin companies couldn't be going much better. And the library scenario was basically the only unfavorable instance we recently witnessed. Furthermore, the court even persuaded the SEC to acknowledge that the token itself in the secondary market is not a security in that situation. It seems as though everything is fitting together perfectly. And it appears like every one of the unambiguous guidelines Gary Gensler has been discussing over the past few months is disintegrating totally in front of them. I'd like to go on at this point and briefly discuss when we might receive a ruling in the triple sec case. Right now, it feels like practically every single date we were given has fallen through. So I'll simply let John D. share his thoughts with you. I demonstrated to you using the other day. Jeremy Hogan had the thought. I believe John Deaton, and he appears reasonably secure in his timeline. Now I understand how inconvenient it is that these deadlines keep getting delayed. You'll notice, though, that the timelines are now only being advanced by a few weeks per month. Max, it appears that the time frame for making this decision is starting to draw closer. Nobody can foresee the future, and everyone is waiting for Judge Torres. It's critical to remember that the deadlines are almost tomorrow, if not right now. John D. is worth listening to, therefore do so. And like I mentioned, I'm just as irritated as everyone else that the decision hasn't been made yet. Yet at least everyone's predictions for the immediate future are now extremely close. Pay attention to John D. And I've been saying that the decision will come sometime between March 6th and May 6th. All we can tell is that if you look at her prior cases, this is the typical schedule for the summary judgment ruling. It might be today, or it might be May 6th. She hasn't made up her mind, so if May 1st arrives, I'll be shocked. So that's what John D. had to say. He believes that May 6th would be a kind of surprise date if we don't have anything. We are aware of the James K. file, and Jeremy Hogan anticipated that the judgment would already be in. So it actually believes that it could be any week. Let's now cross our fingers and hope for the best. And to wrap up this video, I'd like to briefly discuss a collection of interesting charts that were just brought to my attention. Now, what we see is that we are already in a very key position in a number of markets. We can see that Bitcoin is currently running into a reasonable barrier right here, and we can see that the Nasdaq is running into some significant opposition. But most importantly, we can see that the dollar is approaching a significant support level, and we want to know that the dollar will definitely fall through this. As Americans, we do not want to see the value of the dollar decline. I'd rather not see that. Yet, for all markets, it would be unquestionably extremely bullish. And what may trigger it? What could prompt us to finally gain real momentum and emerge from these enormous troughs we have been in? In other words, if you can look at these charts and merely picture a few candles rising above these levels, you can probably picture a very significant reversal from the lows we witnessed a few months ago. So, it would be great to overcome these obstacles. And what could happen that would push us over these barriers and bring the dollar down? That would entail central banks stopping, or even beginning, their rate hikes throughout the world. We just learned in a recent report that the Bank of England may need to lower interest rates more quickly and earlier than originally anticipated. The greatest bullish catalyst we could possibly receive would be this. I'm aware that several individuals have recently questioned why it seems like all markets are moving at the same time in my direct messages. Why does it appear that every cryptocurrency behaves in the same way? Why does Bitcoin move in the same manner as every other stock? That is what happens when you have the crazy macroeconomic circumstances that we currently have. As we return to a more regular era, we'll see the markets move more in accordance with fundamentals. Right now, everyone is just hyper-focused on things like Fed rate hikes and says things like, well, we need to buy stocks, we need to buy investments, or we need to sell them. And I believe that right now we're getting quite close to that moment. Finally releasing their hold on the market and allowing it to breathe a little bit is what we need to see from the Federal. And I predict that rather than just moving in lockstep, many investments will start trading more based on fundamentals. In any case, gentlemen, I hope this update was enjoyable. Please remember to like and subscribe if you did. For the time being, it truly means a lot.